right, let's see. Okay. Good morning, good morning. My name is Daniel, and for some reason, my camera isn't displaying just yet. Let me just do some quick adjustments and see if I can get it going here. Okay. Bear with me just a moment. Hopefully you guys can hear me okay. Do me a favor, if you're in this session and you can hear me okay, just go over to the chat and we'll make sure that at least the live broadcast is happening and everything is working from that standpoint. Hey, good morning. Let's see here. Looks like oh, hey. How are you today? I'm here. I'm tapped in, having a little bit of a technical difficulty right now, just getting things set up. So just bear with me for a second, see if I can get things adjusted for you. Well, I guess we're going to go without screen today. That's okay. Hey, Richard, it looks like you can hear me okay, and things are working okay. Appreciate that. We'll just go with our screen. I guess you don't need me on camera. If you can hear my voice and you can see my screen, then we'll just get going and I'll try to figure out what happened to my technology. You know, isn't that funny? One of the things about technology is that we can't live without it. And sometimes it just gets in the way of being as productive as we can be. It just cracks me up. But if you can hear me well, and Beverly says you can, no, I'm not with VantagePoint Mortgage. Beverly, this is VantagePoint Trading Software. Our company is VantagePoint AI, and we provide an artificial intelligence software program that forecasts the markets in advance with accuracy up to 87.4%. If you're here, you're either interested in trading, you're trading, you might be a VantagePoint family member or a VantagePoint user. We call our VantagePoint users VantagePoint family members because we are family owned and operated, second generation. Regardless, this isn't just for VantagePoint users. This is for everybody. I try to deliver information at a level that everybody can understand it. And we are going to follow up on our session that we did last week. But before we do that, let me just make sure we are all on the same page. This, trading is hard. Right? Trading is hard. You shouldn't be trading with money that you cannot afford to lose, right? That's why they call it risk capital. Risk capital, and I call it risk capital because you're risking into the markets, and the likelihood that you lose it is real. You got to have good money management in place. If you have good money management in place, then you put yourself in a position to at least protect your downside, minimize your downside risk, maximize your upside potential, because there is no perfect solution. I may share some user experiences with everybody today. And if I do, just understand that I'm sharing those with you to tell you what other people have said. I haven't verified their results, and the results may be atypical. But I do like to, give you the details of what other people have said about this. And you can read them in the chat as well. This is a live session. We'll be going into the markets, looking at some of the live markets, as well as some of the markets in the VantagePoint software in a hypothetical environment, so that you can walk through the details in a simulated manner and understand exactly what it is that I'm doing and how I'm doing it. And then we'll do some general market analysis so that we can all get on the same page. That's what today is for. If anybody is here to find out exactly what the FOMC minutes are going to say, I hate to break it to you, Nobody knows that. I can't tell you what they're going to say at 2 o'clock when they come out, but what I can do is use the artificial intelligence and the VantagePoint software to provide you information about the predictive technical nature of what we do. And we'll walk through the details. We'll do some studies related to support and resistance. We'll look at some momentum information, and we'll give you a good, well-rounded view of what we're seeing from an artificial intelligence forecast standpoint. Just remember, what happens with the FOMC minutes later today is a major fundamental event that a lot of people have their eye on. A lot of traders are expecting, have expected a rate cut sooner than what the Fed is kind of hinting at what they're going to do. That has caused the market to retract a little bit. In addition, was anybody here live? Excuse me. Was anybody here live last week? If you were on our YouTube live last week, maybe you watched it in a recording, I guess. Just let me know in the chat box. Go into the live chat right there in YouTube and let me know if you were here last week and you participated in the event, or at least you watched the event. And if you are here and you haven't subscribed to the VantagePoint channel in YouTube, I would suggest you subscribe. We do these sessions every couple of weeks where we dig into the details. We can follow up on those sessions. If you subscribe, you will get notified when this session is expected, when it's scheduled. Hey, Claudio, Sean, glad you're here. Glad you're here. Nori, don't worry. We'll take a look at NVIDIA and we can talk about that. Absolutely. I know there's a lot of earnings people are interested in, especially NVIDIA, which comes at the close of the day today. So we can certainly take a look at that, and we'll walk through the details. And don't worry, we'll have time at the end. I'll ask for some tickers. If you haven't attended one of these sessions before, I like for them to be as interactive as possible. And the reason for that is so that we can, as a group, get on the same page and make sure we're thinking about the markets the same way, and sharing information. Nothing is perfect, but if we're sharing information and we're got open lines of communication, then that's a good thing. Yes, Ann. Yes, glad you're here. I wish I did know everything, Ann, but I don't. All right, so let's dig in. I tell my kids I know everything, if that counts. They don't believe me either, but at least I tell them that. I've got one that's about to be 18, so she knows. All right, so we're looking at the Dow, and the reason I wanted to start with the Dow is because I talked last week, and this is the reason I was asking if you were here. I talked last week about the fact that we are in an election year. And when I say we are in an election year, what I mean is this is clearly a presidential election year, and we have a Democratic incumbent. And we've got to make sure we understand what that means from a seasonal standpoint. What I said last week on February 7th, in case you weren't here, this was the date that we had the conversation. This was February 7th right here on the chart. You can see it. And I apologize if you just joined. For some reason, my camera decided it did not want to work. I'm not sure why. Let me see if I can click it one more time and get it to jump in here. But nope, still no camera. So we'll just go with the software. The reason I was asking that question is because last week on February 7th, right here on the chart, I said seasonally, historically, an election year, Democratic president, February is the weakest month of the year. Does anybody remember me saying that? And like I said, I love interaction, so I got my eye on the chat box. If you remember me talking about February being the weakest month of the year, you can see exactly what's transpired since I said that, and that is a whole lot of nothing, right? Where prices closed yesterday are right at about where prices were when we had our YouTube live last week, right? When you stop and think about that, that's pretty powerful. Now, there's no guarantee that this year is going to be like all the election years, but we had 123 years of data going into that analysis, coupled with the fact that the VantagePoint software, the blue line and the gray line, were going sideways across the screen. From a overall analysis standpoint of the trend, you can see that we've got a sideways trend. If you look on the left-hand side, this is a prediction of a very bullish environment. You can see flattening out. This is the 7th, right? We can see exactly what's going on from a trend standpoint. What I was talking about was the seasonal nature of the election year and February. We have experienced so far a very weak month. Looking at today's performance, and we're looking at the Dow, by the way. If you want to go check out the Dow, you certainly can. If you'd rather go see it as the diamonds, here's the ETF, which is also the Dow as an ETF. But no matter how you slice it, you can see that right now today, the Dow is somewhere around that 385 range. Before we got into this session and this morning and last night, you can see that 385 was a likely story, and that's exactly where the Dow is from an ETF standpoint. From a overall market standpoint, we're talking about 38,500. We're talking about 38,600, right in this range right here, right within this gray bar. And by the way, what's helpful, if there's anybody in here that doesn't know what I'm looking at from a software standpoint, by the way, this is VantagePoint software. I'll walk through some of the predictions, but I just want to give you a good background as to what we were expecting for February compared to what we're getting. And we're getting a whole lot of nothingness, a weak month, a sideways movement. There's been some very short-term opportunities from a day trading standpoint, but overall from a trend standpoint, it's playing out exactly the way we expected it to, right? From a seasonal standpoint and from a prediction standpoint, we actually got a bearish prediction right here on this day when that blue line crossed below from an overall medium-term trend standpoint, which is February 13th. I think that was, Tuesday last week. From a long-term trend standpoint, you can see that we've got weakness coming in here. We got weakness coming in here, overall consolidation. In case you're wondering, when I say long-term, I'm talking 3-day. When I say medium-term, I am talking 2-day. And when I'm talking short-term, I'm giving you 1-day predictive information. And you can see what that 1-day predictive information looks like on the chart. A whole lot of consolidation, bearish, bullish forecast, whipsaw information. When you see that kind of information happening on the 1-day, well, then you know that there is short-term volatility in a sideways market. When you have short-term volatility in a sideways market like this, what you're expecting is some volatile moves, a lot of things up, a lot of things down, but mostly just some consolidation that you have to wait to shake out. With earnings, with the FOMC minutes coming out at 2 o'clock today, there's a whole lot of information that needs to be considered when trading the markets. I use the artificial intelligence and VantagePoint to help me consider that information, and I want to walk you through how I do that right now. This blue line is below the black line. I'm on the medium-term crossover. In case anybody is wondering or has a software, and your question is, which predicted trend indicator is ideal to use in what scenario? If I get any trending in the market for more than 5 days, I'm on the medium-term crossover, right? If the market isn't trending for 5 days or more, then I might go to the short-term crossover. I use the long-term crossover, which is the 3-day prediction, to help me understand my position management. But from an overall trend standpoint, I'm on the medium-term crossover, which you can see the short hotkey is F7 if you prefer to use those hotkeys. But what it's telling me is that the blue line and the gray line are touching each other, riding on top of each other. And now, as of 6:30 p.m. Eastern time yesterday, I'm getting some bearishness, which would be a bearish trend forecast from the artificial intelligence on the Dow. That bearishness that I can see is also supported by the fact we could expect somewhat of a lower low today on the Dow. A lower low, remember, this is a predicted high and a predicted low. When you look at this gray bar over here, if you've never seen this before in VantagePoint, this is a predicted high and a predicted low that I get every single day on every single chart that I look at in the VantagePoint software. And if it's slightly shaded green on the top, that means, we can potentially expect a higher high. If it's shaded red on the bottom, we're expecting potentially a lower low. There is no guarantee that that's what we're going to get, but with a high degree of accuracy, this can provide some really good guideposts, some upper and lower control limits for what I'm expecting today from a market movement standpoint. Well, with the lower low expected and a trend going down, I would expect prices to be hovering in the lower side of this gray candle or gray bar. Excuse me, the YM is at 38,567 right now. 38,567 is basically where I drew that pink line. Now I've got, in case you're wondering, I've got over 25 years experience in the financial markets, with almost half of that in the VantagePoint software. So I can look at these indicators very quickly, very easily, and make some of those conclusions. But why I like to do these lives is to share with you ways to interpret these indicators or any indicators that you're using a little bit better. Now, obviously, these are predictive indicators. You might be using moving averages. You might have a 20-day and a 50-day. Who knows what your moving average setup is? You most likely, if you're not using the VantagePoint software, don't have a predicted candle for the next trading day. That's a proprietary indicator. We've got that process patented here at the VantagePoint AI. But still, the idea is understand the overall trend expectation. Even if all you have in your software or your tools are lagging moving averages or historical information, you need to at least understand what the trend has done lately, right? It's better than closing your eyes and going with your gut or just reading the news or fundamentals, in my opinion. The VantagePoint software, I'm doing something very, very specific in getting predicted trend information. If you're not using the VantagePoint software, at least look at that historical information. Now, remember one thing. This is something I always like to note is that, trading is a zero-sum game. That means there's losers, there's winners. The people that are winning and trading more often are the ones that have an edge, the ones that have some sort of advantage. And that's where VantagePoint comes into the picture for me, is that edge, that advantage. And you can see how I'm doing that. All right, so we got bearishness. The predicted high gives me a slight tinge of bullishness, so we're not expecting a rout based on the predictive technical indicators, but still overall bearishness. Now we can look at the strength. Now, one thing that a lot of traders miss out on is understanding or trying to realize what the overall trend strength can be. Remember, there's a lot of details about a trend that can provide you some insight and information. One of them is trend direction, but the other one is what is the strength of that trend, meaning is there a lot of bullishness working its way into that? One of the things that traders like to use is volume to understand that. I'm going to pop volume on this chart so that you can see you have increasing bearish volume, right? These are the last 3 days of volume bars. A bullish day, the next day was a bearish day that was bigger than the bullish day, and then yesterday was a big bearish day. So we have increasing bearish volume. VantagePoint, because it's using artificial intelligence, isn't just looking at volume, it's looking at volume, it's looking at open interest, it's looking at the price movements of the stocks, it's looking at intermarkets. As a matter of fact, look at this. I don't know how many people here have not seen this before, so forgive me, but I want to show you. This is also what VantagePoint is looking at, and these are what we call the intermarkets for the Dow. The AI has figured out for the Dow that all of these markets around it drive, influence, and impact whether the Dow goes up, sideways, or down. And because we know how powerful artificial intelligence is, it can do that with a high degree of accuracy every single day for every asset. There's over 30 markets on this list. Some you wouldn't suspect. Norwegian Cruise Lines. Would anybody here go look at Norwegian cruise lines to see what the Dow's going to do? Probably not. And if you did, you probably wouldn't be able to figure out how Norwegian influences the Dow. Well, that's the power in the artificial intelligence, is that's what it's doing in order to give me this information that we're talking about, right? This predictive information. But I don't stop there. I keep on going forward and I look at the overall momentum. This is predicted momentum right here. And what I'm doing with the predicted momentum is understanding which way the momentum is moving, shifting, or sliding. And I can see I'm getting lower highs from these momentum indicators. Momentum has shifted to be predicted momentum. And guess when it shifted? Do you remember that conversation we had on February, what was it, February 7th? There it is. You can clearly see that from that day forward, it has been a bearish momentum climate from a predicted standpoint, right? Let me ask you, go to the chat really quickly. I know you can't see me, and I apologize for that. For some reason, my camera isn't working. If I could do some percussive therapy to it, which would be hit it with a hammer or a mallet to get it working, I would. But it's not. So go to the chat box really quickly and just tell me, if you see an overall trend expectation that is bearish with some bearish expected candles, and strength is down and momentum has shifted bearishly with increasing bearish volume, what would that tell you about the market conditions expected the next day? Do me a favor, go to the chat and just answer that. I'm going to grab a drink of water really quickly and give you the opportunity to answer that question. All right. Looks like I've got some other technological issues because there's a big delay in the live, about a 10-12 second delay in the live that is just causing little things delayed. So when I'm asking questions, they're taking a lot longer to come through. So when you answer that question, just put it in the chat box. The answer to that question is simply and clearly, we know that bearishness is expected. And again, I'm writing with a mouse, so bearishness is expected from a Dow standpoint. But now let's layer on some other studies. And when I say studies, let's layer on other forms of analysis to help us understand what is overall, what does it look like from a support and resistance standpoint. If I put support and resistance, which is an indicator that I like to use in the VantagePoint software, it's an extra indicator that I have as part of my license. Not everybody has it, but you can see there's resistance up here. As a matter of fact, this is clearly a 52-week high. I can even put that on the chart as well. I like to see that. Yep, we got a 52-week high up there. I have an indicator that shows me whether or not this is a 52-week high, and we can see that is absolutely the case. Well, in this case, what we've got going on is just the fact that not only is price hit its head on the ceiling and fallen and retested and failed that retest, but with this being the weakest month of the year for an election year, I've got to consider the fact that it came up, it found a high, it retested that high and failed off it multiple times, and now bearishness has worked itself in. I could expect prices on the Dow to fall to 38,100 in that range. Not that it's a guarantee that it will, but if it falls down to 38,100, right down to that support point, I would not be surprised. You probably wouldn't be surprised either. You know, what I mean is we have a shift in the markets, and that shift happened at the beginning of February. That shift has been moving consolidated, moving sideways for quite some time. And it's obvious that that's the case. We already had some predicted momentum indicating bearishness. I think you can see that very clearly, very easily. That shift in momentum to bearish can also be seen if I put, for instance, predicted RSI on the screen. If I go to RSI and I just put it on the screen right here, you can see down here at the bottom, RSI has been creating lower highs since the beginning of the month. Look at this. This was the highest high of the last, look, January 30th marked the highest high in RSI over the last month. Since then, it's been creating lower highs. There's February 2nd. There is, what day is that? February 12th. Here is February 15th. It has been consistently getting lower highs. That is a clear reading of RSI saying momentum is turning and turned from bullish right here to bearish. You can almost clearly, I'm gonna scribble it in so that you don't miss it. You can almost clearly see where that turning point was. That was the beginning of February, folks, end of January. So take a step back and think about that. Momentum, this arc for momentum from the VantagePoint predictive information and the predictive differences, as those are called, this arc in momentum from an RSI standpoint all have very similar pivot points. And those points are the beginning of February, which means what we're getting from the Dow for February is not unexpected. if you were able to use this and read this information on a consistent basis, you'd probably agree with me that that is not unexpected. So what does it mean now going forward? It means we're expecting more of the same. We're expecting more of the same. We've got a resistance level up here. We have a support point down here. Prices have been in this channel all month long. Look, you can see it's right within that channel. It was a little tighter channel earlier in the month, but prices haven't changed. I could draw a line on the bottom of price and the top of price, and you can see there is a very clear channel that is going sideways across your screen. Now, I know I'm scribbling on the chart a lot, but I do that just to try to provide a clearer picture of what I'm seeing when I look at this chart. So hopefully that's helpful. Now, some of the other studies that I like to do, that we've got some support and resistance on there. We put volume on there. We've got an additional momentum indicators on there. We could do things from a volatility standpoint. There's people out here that like to use Bollinger. We use a predicted Bollinger, the VantagePoint software. I like to overall view what the professionals are saying about the overall move itself, and I could do that with a professional sentiment index. The professional sentiment index, you can see, is right between the zone. This is down here at the bottom. This is the Larry Williams Professional Sentiment Index. Now, mind you, some of the things I'm showing you, they're just not automatically default in the VantagePoint software. I have extra indicators, and some of our VantagePoint family members on today's session have some of these extra indicators added to their license because, again, these are non-redundant indicators. We talked momentum. They're predictive indicators. We talked volatility. We're talking a lot of things, including professional sentiment. The Larry Williams PSI, the professional sentiment, has been creating higher lows, which when it's in between this region, that's an inverse reading. So don't be mistaken by that. That is a bearish reading for how this indicator works. If you've got questions how that indicator works, or you've got questions on anything you're seeing in the software, by the way, if you don't have the VantagePoint software, go to VantagePointForecast.com and get your questions answered. Again, that is VantagePointForecast.com. We'll drop it in the chat so that you can get your questions answered. If you've got the software, reach out to VantagePoint University. Talk to somebody here, and we can dig into some more of these indicators and get your specific questions answered. But when I see this, when I start to see this picture of the Dow, I see more bearishness and consolidation expected, right? More bearishness and consolidation expected from a Dow standpoint. And I can do this same analysis on the diamonds, on the ETF, and you're going to see the same picture. I also have the SPY pulled up here. And the reason I pulled up the SPY, the S&P 500, is because I wanted everybody to see that the artificial intelligence for the SPY is also very, very powerful. All the markets are very powerful. This is a very big uptrend. You're seeing the beginning and end of a powerful prediction on the SPY. For those of you that don't know how powerful this is or what this means, let me just walk you through it really quickly, and then we'll take a look at some of the other charts. The SPY was forecasted to move higher for the second time, or the first time this year, but the second time in a long uptrend on January 2nd. That was the point the artificial intelligence said, we have a new bullish trend expectation with bullish strength being predicted. Momentum shifting from bearish to bullish going into that day. We had all the bullishness we needed at this point on January 10th on this chart. Well, as long as that blue line stays above the black line, here's a great way for you options traders that are listening. Here's a great way that this is used is you can set your expiration out 30 to 45 days, right? You can buy a February expiration. You can buy a March expiration. That's up to you and your trading plan. But if you did that, you could, as long as that blue line stayed above the black line, continue with that trend. Follow me. Look at this. Stayed above, stayed above, stayed above, stayed above until 6:30 p.m. Eastern time last night. At 6:30 p.m. Eastern time last night, you got to cross over to the downside. If I just go cross to cross, right there, let's say 5 contracts, 500 shares, minus some premium, that is hypothetically about a $7,000 gain. That's why I say that's a very powerful, a very valuable move on the SPY. And you can see what was predicted back in January and then what was predicted at 6:30 last night for today. Let's walk through that. This is the SPY. This is not the Dow. Let me, what was it? I think I had 500 in there. There we go. I'm going to get that off the screen just to make it a little clearer for you so that you can zoom in on the right-hand side of the chart here. Look at this. Last night at 6:30 p.m. Eastern Time, I got the update that said we got to cross to the downside. Bearishness expected for today. Today is February 21st, and it is Wednesday, right? It's saying here that there is weakness expected from a strength standpoint, expecting a lower low, but potentially a slightly higher high. That's what this is saying. So bearishness so far across the board, but because we have that slightly higher high, all that's telling me doesn't mean that it's going to go up and break through that. It means that it's not expected to fall off a cliff today, but it is expected to be on the bottom side of that range. Why? Because that trend is on the bottom side. That strength is bearish, right? The momentum, we can do the same exact momentum study we did with these predicted momentum indicators and see that at the end of the month, they started creating some lower highs overall. Specifically, more specifically, last time we talked, I said it was creating some lower highs. And you can see at 6:30 last night, just look at right here. This is what the AI was saying. It was saying, expect some weakness in the ES. That bullish trend has come to an end from a forecast standpoint, and there's a potential new bearish trend expected. And we could expect prices to be on the bottom side of that. Right now, I think the SPY is at 495.84. Where's that? 495.80. Right there, right in that range. Let's get the scribbles out of there. So right now, the SPY is sitting right in this range. Call it there. There's 74. But you get the point, is that it has pulled down further from where prices were forecasted yesterday, right? Where prices were forecasted yesterday. And that's something that I think everybody would have wanted to know. And if you don't have the VantagePoint software, you can see why it's so valuable to have it. The Qs, different story on the Qs. This happened earlier in the week. This forecast to the downside happened before the SPY, before the Dow. Now, one thing I want to talk about, here's the Qs. I've got it up on the screen. We can zoom in on it. One thing I want to talk about here is that support and resistance level. If I put that 52-week look back indicator on the chart, you can see this green line is the 52-week high. This red line is the 52-week low. It's at 285.19 down on the low. When I put it on the chart, it scales the chart. You can see how long prices have been at the 52-week high, either setting new highs, retesting highs. We got a failure off of that 52-week high at the end of last week. Now, I know there was no trading on Monday, but you can see this would have been Tuesday, this would have been Friday, this would have been Thursday. It tried to get up to that 52-week high that was set on 212, and it couldn't get up there. That is a resistance failure. And then the predicted trend indicated bearishness. And then there was weakness forecasted with the neural index. That's a predicted neural index, or PNI, if you ever heard it called that. That's what that indicator is called, and bearish momentum. So no matter how you slice and dice it, very clear on what was expected from the indices today, and that's exactly what we are getting. And at 2 o'clock, when the FOMC minutes come out, we'll be able to get some insight on what the dollar is expected to do. You can see there's a big bullish move in the dollar. It's been going for quite some time. It's just, you know, the dollar's been gaining strength since the beginning of the year. The questions a lot of traders have is that going to continue once there's a conversation about the meeting minutes? Well, I don't know what's going to happen from the minutes, but I can tell you the VantagePoint indicators shifted bearishly on the dollar this week, indicating some bearish move expected on the horizon. Will it be a big one? Will it be a small one? You know, that's where a lot of traders really get caught up in the minutia, the details. And for me, how big or small it is at the beginning doesn't matter. The fact that it is now bearish, down, is what matters from my perspective, because that's the end of this big bullish run based on what the artificial intelligence is saying. That's over 2%. One US dollar contract produces over $2,000 in gains in that one trend alone. And depending on how you trade the futures, if you do, maybe you do it in Forex. There, we can look at the Euro USD. Maybe you like to look at it that way. I'll pull that up. The Euro USD, you'll see the Euro falling and the USD, beating it out until the end of the week last week. This is the exact inverse of what we're seeing with the dollar. And for those of you that don't trade Forex, just understand the Forex is trading the euro against the US dollar. The euro is the base pair. So you can see the euro has been losing value compared to the dollar over the time. And that's because the dollar was gaining value. You compare the two and you can see that those charts are exact inverse of each other. And just now we can see that the euro US dollar pair, the euro, has done very, very well over the last couple of days, simply because the dollar consolidated and now has turned bearish. And that is valuable information, all predicted with the artificial intelligence. So you Forex traders out there, take a look at what these forecasts can do for you, because I think you'll agree that having this kind of information, even if, as a VantagePoint user, if you're not trading Forex yet at this point and you understand how to interpret the indicators, mini lots and micro lots make it very, very easy to access the Forex market, especially when you've got this kind of information at your disposal. But the reason I went to the US dollar is because what happens at 2 o'clock could drive a really powerful, quick, short-term move in the dollar that I'm certain people in this live session really want to know and take advantage of, right? So, all right, let's keep it going here. Let me go to, what was it, NVIDIA somebody asked for, waiting for that earnings information to come out after the market today. Look at this forecast on NVIDIA, by the way. I just want to call this out. Where VantagePoint indicated the forecast and the stock was expected to start going up was the beginning of the year, all the way to the close yesterday. This is a very, very powerful move. Over 40% gains in a hypothetical market. That's $101,000 using 5 options contracts. Of course, take your premium off of that. Doing that strategy, that process that we talked about. We've talked about it many, many times. If you're on the VantagePoint YouTube channel, there's how to trade options using VantagePoint in the live videos. You can go to the video section and watch some of those old lives, and we'll have some more on it. I'll walk through the details in options trading, but look at this. Look at this move and this hypothetical gain here just from 5 contracts of NVIDIA, just using this forecasted information. So let's talk about what VantagePoint is saying about NVIDIA now. Just remember, there are earnings today. So from an earnings standpoint, you can see there's an earnings flag right here that tells me that earnings are coming up February 21st. If you don't trade earnings from an educational standpoint, this flag tells you, okay, go find something else to trade. Maybe that's where you exit your position leading into earnings. I don't know. Maybe you set stop losses. Maybe you hedge by doing a straddle from an option standpoint. I'll leave that up to you. But knowing that earnings are happening today after the market close, this is a substantial move that you probably want to mitigate and protect, right? And stop losses around earnings, because they come after the market closes, aren't, in my opinion, it's just my opinion, aren't really that helpful. You got to make a decision. Am I going to use this information to trade through earnings? Does my trade plan allow me to do that? Do my risk tolerances allow me to do that? And those are all questions that you've got to ask yourself. But when I look at NVIDIA, what we're seeing here is a very, very strong resistance point up here. All right, if I put the 52-week high, you can see that 52-week high was set, tested for 3 days in a row and could not get beat. You could even call this 4th day a test, but I would say that's a bounce off of resistance, and then this is a retest 1, retest 2, retest 3, all failures off of that earlier set 52-week high on February 12th, right? Now the high on that day was 746.11. The high on this day was 744.02. So that's why I say this is the 52-week high mark, 746.11. Well, what happens since it set that high? Take a look. I'm going to put a line. I'm just going to put a line on that day that 52-week high was set. Okay. What has happened from momentum from that day to today? What do you see going on here? What happened to momentum going to that day? Started to flatten. Remember that pivot point I was talking about? I can very clearly see the pivot point from a 2-day and a 3-day momentum standpoint. The pivot point on the 1-day predicted momentum happened sooner. But look at that. That's the day that it set the 52-week high. So from that day forward, things have shifted. Even the strength shifted bearishly. right? If you don't trade into earnings, this is about setting a nice tight stop loss, which you could have been stopped out in the last day or two, or exiting that position. If you do trade through earnings, then you've got to figure out, what am I doing with this? And then what am I doing with the earnings? It's two different trades, two different strategies. Don't forget that. Don't forget that. Moving into earnings means that there's a different trade plan, a different strategy that I would need to apply, in my opinion. I'm not just going to use a regular position management structure with earnings happening here this day. Up to earnings, I've got to play. If I play before earnings, well, then I've got to decide what that play is. Am I going to do the volatility rush and play the volatility crush? Am I going to do that? Am I going to sit on the sideline? Am I going to take this position off and then put on a smaller position going through earnings? Or am I just going to wait and let it see what happens? In this situation, I've got enough of a reversal forecasted from that 52-week high to say, you know what? 40% gain is a great gain for me. Trade plan says that target was hit a long time ago. Well, then, live to fight another day. That's my opinion, but I'm not telling you what to do, and I'm not providing trading advice. From an earnings standpoint, VantagePoint for around earnings for an NVIDIA has about a 61% accuracy in predicting, meaning it can predict around earnings at a 61% accuracy rate over the last year. That's not high enough for me to say, hey, yes, go play that through earnings. If it was, I would see that the short-term crossover had crossed to the downside. I would see that the support and resistance levels were very clear in the fact that there is a resistance point and a support point here telling me that prices could fall further. If it breaks below, and it did, broke below that resistance, that support point right here, and closed below it, I could expect it to go down about 605. I've got enough here from a momentum standpoint. Look, let's put on our momentum study here. If I go to my technical indicators, I'll put on MACD, RSI, stochastic, and take a look. Bearish, bearish, bearish. I've got enough here to say, you know what? This earnings play is not that important to me if I'm seeing all of that bearishness going on, but still some positive things about NVIDIA in general. When we're talking about the fourth quarter, remember, we're talking about from here. Let's go 6 months. What the readout is going to be from here, overall performance of NVIDIA that day, to their quarterly performance. Again, where is it? Beginning of October, somewhere in that day. That's what they're reading out on today, right? So you've got to understand, this latest biggest run is not part of that equation. Seeing a lot of bearishness in the market, but that doesn't mean anything. I'm not predicting earnings. VantagePoint isn't predicting earning. It's predicting how accurate the artificial intelligence is around the earnings time, but by no means is it predicting for you what earnings is going to do. It's providing you predictive information so you can draw more accurate conclusions. Remember, the idea is not to trade off of what you think and feel. If you know who said that, go to the chat box right now. The idea is to trade off of what you see. And the AI sentiment, the artificial sentiment that I am seeing on NVIDIA is more bearishness than anything going into earnings, which means I have to consider that. Right or wrong or indifferent, with an accuracy that's up to 87.4% accurate, that needs to be considered. All right? Good. Good, good, good. I think we're all on the same page there. Claudio, Tesla. All right, let's bring up Tesla. Claudio, what did we say about Tesla last time we talked? Last time, it was February 7th. We said something about Tesla and what Tesla was expected to do. How has that done for you, my friend? And the reason I'm asking that question is because you can see here on the chart where February 7th was, and you can, and you probably remember what the conversation was around Tesla at that time. And no matter how you slice it, Tesla's price is higher today than it was back on February 7th. And I remember the conversation we had about it, about things finding a bottom and expected to shift from a bearish standpoint to a bullish standpoint, and all of that conversation, right? I don't know that I said buy, Claudio, but I think what we said is we saw that shift happening, right? We saw that shift happening. Jeff, what did Greg Furman say? Fill me in. What are you saying? Greg Furman's one of our long time users. He's been using the software for over 25 years, something like that. He and I are very close. So interested in what you're saying, Greg Furman said, because I'd love to razz him about it. Too funny, too funny. All right, so we can see there is the information on Tesla. We can see that it did find that bottom. This was February 6th. We can see that the momentum was shifting. We can see that the strength had shifted from a short-term crossover standpoint on that day. That was the day that we were talking that there was a potential shift on. So we did see things shifting, right? We did see things shifting, and that's an important piece of that. Greg Furman said, trade what you see. Greg Furman certainly did repeat trade what you see, absolutely, but he's not the one that said it. Too funny, too funny. Good. Don't trade off of what you think and feel, right? We add here at VantagePoint, trade what you see with artificial intelligence. So let me see. Barbaro is asking about for contracts April 90 strike. So Claudio, you went deep in the money on Tesla out to April expiration, and so far right now you got a 190 strike. So you bought just out of the money. Okay, I saw April 90 strike. I was like, oh, you bought deep in the money, but you're talking 190. So you bought slightly out of the money. You got into the money. Not sure if you hit your target or not, but you've got till April to see more of that happen. Now, time decay is hurting you a bit, right, Claudio? Because that theta peels off as you get closer to expiration, and with Tesla kind of mucking around with the Nasdaq pulling back, you can see where that's a little bit of an issue. But all right, let me see if I have that one. SMCI, could it have? Hi, Daniel. Could VantagePoint have predicted the $200 sell-off in SMCI on 216? Now, SMCI on 216, you said a $200 sell-off. Let me ask you a question. Here is SMCI. Did a $200 sell-off in SMCI wipe out the VantagePoint prediction? And the reason I'm asking for that is because VantagePoint predicted SMCI to move higher January 5th, right? January 5th, all the way up, even considering, let's consider that $200 sell-off into where the market is as of the close yesterday. That's 168% gain. Here's what VantagePoint predicted. Bullishness all the way through, and still, even after a $200 sell-off, still bullishness overall from a trend standpoint, even though that is waning. Now, Barbara, just for your information, for anybody else, remember, a big sell-off like this is usually the result of some fundamental event. That's why we predict the high and the low, so that you could use them for potential stop losses. So I'm going to put this on the chart. Here's what VantagePoint predicted for the high and predicted for the low. On this day, VantagePoint had a predicted low of 801. And the reason I'm showing you this is because if you use that as a point of where you'd say, you know what, enough is enough, I could get out of that. Let me show you. I'm going to go again. I'm going to go predicted high and predicted low. I said 801, but I think the predicted low was 966. Look in the top left corner, guys. Follow me over here. VantagePoint predicted on that day a low of 966.72. No. With an accuracy up to 87.4%, it cannot predict 100% of the events, which is why you have to use that 966 as a guidepost to say if the market falls below that, I've got to figure out where my stop loss point is. Now, a lot of people use a stop loss that's 72 hours back. Some people use that predicted low. But let's say you set a stop loss at 900 because VantagePoint predicted a low of 966. That's over a 200% gain. A 200% gain in one stock, in one trade, in one prediction from the beginning of the year. Barbara, would that have helped you, knowing when that trend started and how to use this information to use those predicted lows and highs for potential stop losses? If so, just let me know in the questions box. I think it's important that we talk about that and walk through the details on that. Some of the other things that have happened that people always say, did VantagePoint predict it? Discover being acquired by Capital One. There's Discover. Did VantagePoint predict bullishness in Discover? Yes, January 26th. That acquisition news came out. There was a huge gap up on Tuesday morning when the market opened, up 18%. Well, VantagePoint forecasted overall that Discover was expected to start moving higher January 26th. That's on top of this big trend. Look, another big trend with a predicted downtrend on January 9th previous to earnings. Guys, let's talk about this for a second. Let's talk about how to use this information. Let me zoom out. Here is the whole Discover trend. November 1st, we know what the financial sector did, all the way to January 9th when VantagePoint indicated that this trend was expected to reverse. Let's do our studies. Let's walk through this Discover trade example and do everything that we've done today. I'm going to add volume. And I'm looking right here, folks. I'm going to drop a line right here so you're not mistaken. January 9th, we got that forecast to the downside, clear as day. We see that red in between those two lines. We had momentum shifting off of that, moving into that day bearishly. We had a shift in strength from bullish to bearish. We had a crossover. We had from a volume standpoint, volume had increasing bearish volume and then bullish, and then boom, back to bearish again on that day. I'm going to put on our momentum indicators. What else did we have on here? We had MACD, RSI, stochastic. There you go. I can shift this stuff around just so you can see it a little bit better. But on that day of that line, the predicted MACD was indicating bearishness. We were coming off of the highest RSI we'd seen in a while, predicting bearishness. We had a stochastics indicating bearishness and consolidation going right into that moment. So I had enough, anybody using this had enough to say prior to earnings, when Discover fell off a cliff here, prior to earnings, this bullish trend from November 1st had come to an end. Think about your trading over the last year or 2 years or 3 years or 5 years. If you didn't, I went back to a year, sorry. If you didn't make any more money, you were just able to eliminate these major drawdowns that happen very quickly, what would that do for your results at the end of the year? Remember, I'm saying not making any more money, just eliminating some of these moments where you draw down very, very quickly. I think it's safe to say, without question, that makes a difference. At the end of the year, that makes a big, big difference. And you can see how VantagePoint does that. And I'm just pulling up stocks and markets that you're asking for or they're in the news. Jeff's asking for EOG. EOG Resources. Oh, it's got earnings coming up, Jeff. Okay, so the EOG Resources, you can see that it is in a channel. When I see something like this that is in a channel very clearly, look, we've got a strong support point down here. We've got a basis for resistance up here. I can draw this channel and say, look, when it gapped into this channel, it's just been banging around like a pinball since. I'm not expecting anything different. As a matter of fact, I don't even see enough here to say it's worth any risk, in my opinion. That's up to you. So let's do some analysis on what VantagePoint is saying as of the 6:30 download last night. The short-term crossover, consolidating. Look, the blue line is above, but it's pointed down. That means sideways from a short-term trend standpoint. The medium-term crossover, Jeff, consolidating. The long-term crossover, slightly bullish, okay? The triple crossover, consolidating. It's yellow, and all those lines are stacked on top of each other. We got a predicted high that's higher, predicted low that's higher. It's saying an outside bar, which indicates sideways or consolidation. Neural index red, bearishness. Momentum indicators are just stacking up on top of each other. We got some of them that are saying sideways. One of them is saying bullish. So, Jeff, as I walk through this, so far what we've gotten is 1 bullish, 2 bearish, and like 7 consolidating. What is the artificial intelligence saying about EOG right now based off of the default indicators that are available to everybody that has the VantagePoint software, except for, of course, earnings? That's extra. Hopefully, Jeff, your answer is that there is a lot of hesitation, consolidation, and concern going on with EOG, which means moving into earnings, I don't have anything enough to say worth the risk, in my opinion. And earnings forecasts, the artificial intelligence forecasting around earnings has a 66% accuracy rate. That's obviously better than 50%, right? Coin toss is 50%, but it's still not high enough for me to say, hey, if the AI around earnings has an accuracy around 66%, it's probably one of those where it's, if you're thinking about doing something with EOG, it might be better to go watch a movie or take a bike ride or go play golf or take the boat out, or I don't know, whatever it is you like to do in your free time. That's the idea, right? There you go, Ramon. Ramon says in the chat, sideways for now. I'm going to heart that one. Thank you for jumping into the conversation. All right, good. Great conversation. I apologize that I couldn't get my camera going. I will certainly inspect it for next time. Don't forget, subscribe to the VantagePoint YouTube channel. We'll do another event like this, another live session in 2 weeks. We'll dig into the details. Also, do me a favor. Go to the chat right now. I'll take a second here and give you a chance to do it. And tell me what you want to discuss, what you'd like for me to review in the next YouTube Live. What kind of information would you like for me to dig into? What kind of analysis do you want to hear? Nothing's off the table. I'm interested in hearing what it is you're interested in hearing, and I will do my best to bring it to fruition. Just go to the chat right now and give me a nod, give me a heads up, give me something that I can incorporate into future conversations, and I'll do my best to do that. For now, if you are part of the VantagePoint family, let me say thank you for being part of the VantagePoint family. For those of you that took the time out of your day to hear what I had to say and hear what the artificial intelligence was forecasting in the markets, thank you for letting me give you the view from my vantage point. Happy trading, and I hope everybody has a great day.